not necessarily a high level of pay, but a high level of benefits, and offer an environment that's caring and employees feel comfortable in.
Yeah. So, well, and it's, I've heard rates, ACA rates, on the individual market, $3,000 for a family.
Right.
With a high deductible. So that's a paycheck in some cases.
Absolutely.
If you're paying $3,000 a month for your family plan, and you amortize that over a year, I would take $15,000 less in salary.
Yes.
To get a better, to get a cheaper plan.
That's more than a mortgage.
So
how do you deal with that? In the exchange, people that it's income based, so you can get a subsidy.
Okay. You can.
There's a couple of different types of subsidies, but the bottom line is those costs can be reduced depending upon your income.
Right.
And the benefits can actually get increased as well, depending upon your income. But if you exceed those limits, you're just stuck paying very, very expensive rates.
Wow. Yeah, that's it's a big thing right now. The employee benefit, the healthcare, right? Welcome to the Culmen Group Podcast. I'm your host, Great Moore, and we believe the best companies hire the best people, and these organizations have the influence to make the world a better place. Our goal is to serve our listeners, you all, through our stellar and knowledgeable guests and the topics we cover, such as mental health, employee engagement, leadership, and more, in order to enrich the communities we serve. I'm so excited to have the Culmen Group's managing partner, my partner, Greg Moore, not to be confused with my name, Great Moore. And this was not planned, as Greg and I have worked together over the years. And when we decided to form the Culmen Group, one of the things that was very interesting is we almost have the exact same name, and we are not related. So it always provides some comedy when we're out with our clients of our name. So, Greg, thanks for coming on the podcast. I wanted to share your story with our viewers. Greg is, as I mentioned, managing partner. He is really the subject matter expert when it comes to employee benefits. He handles all the operational, working with all of our insurance markets and carriers, and really just has such a tremendous wealth of knowledge to offer our clients. So thanks for coming on the show.
You're welcome.
So kind of take me back. How did you get started in this wonderful world of insurance?
Well, I graduated college in 1989, North Georgia College, with a degree in finance. And I briefly considered going into banking. My father was a banker. And I took a hard look at that, and it just didn't seem like I fit the more I looked at it. So I gravitated into the insurance side and actually started on the property and casualty side of things.
Okay. Where were you first employed at?
In Gainesville, Georgia. Agency in Gainesville, Georgia.
All right.
And
so brief history, and this is how our names are even more common. So I also graduated from North Georgia College a few years after Greg, and my first insurance job was in Gainesville, Georgia at Sidney O. Smith, which is where Greg was employed as his first job, but we were not there together at the same time. So go ahead. So you're there with Sidney O. Smith out of Gainesville, Georgia, having a blast selling property casualty.
Yeah, and it was good, but it didn't interest me as much as I thought it would. And slowly I began to gravitate towards the employee benefit side. It just seemed like a better fit for me. I think primarily because there was a lot more direct employee engagement and a lot more communication involved. Two things I like to do. I like to help people directly. So I ended up going to work for a company in South Georgia named Life of the South. It was one of the few agencies I could find.
Okay.
I basically just called them up and said, hey, I'm looking for a position in this field. And they said, come down and talk to us. Turned out to be a perfect fit.
Mm-hmm.
I'm originally from South Georgia. That's where my father's from. And it just went from there. That was probably 1992, and I've been in the employee benefits field ever since.
Ever since. So Life of the South, give me a little bit of their history for the folks that don't know. How did they get into the insurance business? How did they start?
Oh, gosh, they were originally an old credit life firm.
Okay.
And the owners of it were, I guess, getting asked a lot about other insurance needs. So they just started an agency. And it just grew from there.
Okay. So
it's not anything more complicated than that. And it grew into one of the largest employee benefit agencies in Georgia.
Okay.
So when the owners of Life of the South sold the company, they spun off the agency to a lot of the employees that had worked there for the years, and it became Partners Benefit Group.
Okay, so Partners Benefit.
And it's now based out of Tifton, Georgia, with offices all over the state.
Mm-hmm.
So.
No, that's right, and we're one of the offices that's affiliated with Partners Benefit Group.
That is correct.
So the affiliation, talk to me about the affiliation with Partners Benefit Group. What does that provide the Culmen Group? What does it provide us?
Just a solid foundation to provide our clients with every up-to-date service available to them in the employee benefits field.
Right.
Whether that be the core products, medical, life, disability, etc., or the technology that they need to enable their company to run more efficiently, HR products, technology products. And, so far as we even have some companies on a retainer that specialize in that we can bring into the clients and let them evaluate what is this company doing for their human capital management, and how can we make their business more efficient in this area.
No, that makes sense. Yeah, Partners Benefit Group, they place over $100 million in premium a year, predominantly in Georgia.
Correct.
So it certainly gives us a higher level of service to our clients, as well as we kind of get concierge service from the carriers.
Right, and that's reflected in our direct dealings with our clients. If they call us with an issue, we have an avenue to solve the issue that, frankly, a lot of agencies don't have.
Right.
Just out of the volume we do.
So, what's changed? So, 92, you kind of got in the business. What are some big changes from an employee benefit standpoint, almost 30 years later?
Well, everything's changed. Everything's changed. You still have, at its core, insurance is, you have your policies and you have your service. That hasn't changed.
Right.
And you can make it as complicated as you want to, but it really boils down to policies and service on those policies. But there's a lot that goes on now in between the policy and the service on the policies that just frankly wasn't there. The government regulations have added a large degree of complexity to the whole process. And technology has added some complexity to the whole process.
So what do you mean by technology? What kind of, like the BIN admin systems?
Yeah, the BIN admin systems, the enrollments. It used to all be done by paper. You would hand the employee a sheet of paper and say, here are your benefits. Please check what you would like. And then we'll go from there. And now it's, 70-80% of that's done online. That's good and bad.
Yeah, that's certainly takes away a little bit of the human element out of the relationship.
It does. No matter how much technology you put out there and how complicated or how helpful the enrollment systems are, if I stand in front of a bunch of employees, they're going to have questions that they're not getting answered anywhere else but directly. Yeah. And I think sometimes the technology has gotten to the point where it overshadows that maybe these employees still need a little direct human-to-human communication on what to do and how to operate in this world.
Yeah, it can be very, very complex, especially with the high deductibles and the co-pays and the max out-of-pockets and all these things that can seemingly be daunting if you try to truly figure out what your cost of insurance is.
Correct. And they don't know which plan to choose depending on their situation.
And there's so many plans.
There are.
I mean, has that changed over the years, the number of plans that are available?
Oh, absolutely.
Yeah.
Yeah. When I first started, there was one, maybe two plans per company at the most, and now even a small company can have 4, 5, 6 plans.
Yeah. Yeah. So. That certainly makes it complex, and that's what's so great about the human element that hopefully we add. I know you enjoy going out and talking to the clients and sitting down with the employees and explaining their benefits package.
Yeah, and I find that to be a missing element at almost every level, whether it's a large corporation or a small business. Having somebody come out and explain to the employees what they have, how to utilize what they have, and that helps the employer as well, because the employer's spending a lot of time and money putting this benefit out there for the benefit of the employee. And they need to know what they have and how to utilize it and what it's worth, frankly.
Well, and we talk, you and I talk a lot about that, about the ROI, right? The return on investment, right? And if we're not, we find, and that was the reason we got together to form the Culmen Group, was because the larger organizations have, larger brokerage firms. They've really, because of their cost model, they really can't afford to spend an enormous amount of time with smaller groups.
Correct.
So a lot of those smaller groups who could be spending $10,000, $15,000 a month just don't get the same level of service because they may be at a cost center or a service center where they need to call in and have questions answered.
That's right. And we've gotten a few calls that where they said, "Hey, we just need somebody to pay attention to us."
That's right.
I've got employees with questions, I've got questions, and I have no one to turn to.
Yeah. No. That's certainly our value proposition, is that we absolutely want to be hands-on.
Right.
Be in person. And to your point, if we do, when we do that, the owner or the executive of the organization understand what the ROI is, right? Because it's a significant cost, but if the employees don't understand it, if they're not using it, if it's more of a hassle, then typically what you're getting is just negative feedback from this enormous expense.
That's right. And to that hassle factor, that's something I see a lot, or they put benefits in, or that sometimes even technology in that frankly wasn't necessary.
Right.
It's a double-edged sword. If you're spending more operating the tech you put in, then it's saved in time. Well, you're kind of defeating the purpose. Tech is great, but there's a point where it's not for every company.
That's right. Yeah, especially if you've got a lot of folks that are maybe out on production floor and they don't use a computer on a day-to-day basis.
That's right.
It may hinder the process rather than help.
Oh, absolutely.
Absolutely.
And just frustrate everybody.
Yeah, and everybody's frustrated, and I think that's where you do a great job, where we do a great job, is going out and just taking the paper apps in some cases.
Yes,
and explaining, these are your options, this is what you got,
Right. If they have a simple benefits platform and all the employees are under one roof, they have a lot of blue collar, sometimes paper is still a good method to, if not all of it, at least most of it. Because if they're not spending a lot of time on the enrollment, if it goes smooth, well, sometimes you're trying to fix something that doesn't need to be fixed.
That's right. So over the years, I know you've seen deductibles just continue to increase.
Right.
And probably one of the newer, I guess, in the last few years is this level funding. So when a company hears level funding, kind of what does that mean for the organization?
Well, that's just a way to fund the premiums themselves. It's not really deductible related.
Okay.
So what happened is when the ACA came into play recently, I mean, you pretty much got community rated rates
Okay.
that are very expensive in that 2 to 50 employee size.
Mm-hmm.
And it's an all takers rate pool. So it's going to be expensive because
Right.
it doesn't matter what risk you have in your group, or how sick they are.
Mm-hmm.
They're going to get the same rates as a group that's not sick in that
Mhm.
pool. So what insurance companies did is said, all right, well let's see if we can't find a way to self-fund these smaller groups
Okay.
and pull them out of the ACA pool.
Okay.
So they did. They created level funding, which is self-funding with your maximum risk already built into the monthly premium. So the small group is going to pay a monthly amount
Mhm.
like they always do.
Okay.
And at the end of the year, that's going to be adjudicated. So if they had a good year and their claims were better than expected, they'll get some money back or a credit going into next year.
Mm-hmm.
If they didn't have a good year, well, they're going to get a renewal that reflects that, and the premiums will be adjusted and they go forward again.
Mm.
What that does for your healthier groups, younger and healthier, and just healthier, is it lowers the premiums in some cases quite a bit
Mm-hmm.
compared to what they would have in a fully insured ACA group.
Yeah. Yeah. So the fully insured. You talked about community rating. What does that mean as far as community? How do they come up with what's the community?
The community is just everybody. In other words, they can't separate the rates based on gender
Mm-hmm.
and to a degree where you live or where you work.
Okay.
So it's more of just a lump sum pool.
Mm-hmm.
So this is the risk is rated based on where you are, and it's filed with the state.
Okay.
And all of the carriers in that ACA fully insured pool, their rates are very close to each other.
I see.
Yeah,
they're-
some will be more competitive than others going forward in a year-to-year basis, but by and large, they're very close.
And so for the most part, if you're in the ACA and you're a healthy group, you could potentially save money by going level funding
Correct.
if you get out of that community rating.
Right. And then everybody is subject to the ACA.
Hmm. Right.
But that 2 to 50 life guaranteed issue fully insured pool was created when the ACA was created.
Okay.
And it has its pros,
Mm-hmm.
it has its cons.
Mhm.
The good part is no matter how sick your group is, you have a place to go.
Right.
There was a time when that was not the case.
Mm.
So what happens is, let's say you say, I want to go to this level of funding.
Mm-hmm.
All right, you do. You have a good, healthy group. Well, that changes. Your group's not so healthy moving forward a couple of years down the road. Have bad claims, and your renewals reflect that. Your
Mhm.
renewals become too high. So you may end up falling back into the ACA fully insured pool.
Okay. But there's somewhere to go.
But there's somewhere to go with
Yeah.
it that wasn't there before.
Yeah.
So
And if it's 2 to 50, if my company size is 2 to 50, do I have to offer insurance?
no, you do not.
Okay.
You're not required.
Not required. So in that case, my employees could go to the exchange.
They could.
Now, will I get penalized if they go to the exchange?
No,
Not in that-
in that employee size.
Okay.
So you have a lot of flexibility as a small company, and there are companies that hover in that, I don't know, let's say 40 life range that
Mm-hmm.
purposefully stay under 50 lives just so they can have that flexibility.
Mm.
Now, in the end, most businesses are going to offer it because it is important. Your better employees, your
Mm.
responsible employees,
Right,
the
right.
ones you want behind that desk or on that floor. Well, chances are that they care about themselves and their families, and having benefits is important. So they're not gonna want to be hired by your company
That makes sense.
if you're not carrying it.
Yeah. Or if it's a very limited plan.
Right.
Yeah. Yeah, that's something I was reading recently, is how important those benefits are going to be for employees.
Yes.
So that's going to be, you may extend an offer to an employee, but once the offer is extended, probably the second question after the offer is, talk to me about your benefits plan.
Exactly.
Yeah.
What are your benefits? That's number 2 on the list, right? And in some cases, maybe even before the salary.
That's right. Yeah.
Evidence has shown companies that retain their employees longer and have a higher degree of satisfaction and comfort from their employees are companies that offer not necessarily a high level of pay, but a high level of benefits and offer an environment that's caring and employees feel comfortable in.
Yeah. Yeah. So, well, and it's, I've heard rates, ACA rates on the individual market, $3,000 for a family.
Right.
With a high deductible. So that's a paycheck in some cases.
Absolutely.
If you're paying $3,000 a month for your family plan and you amortize that over a year, I would take $15,000 less in salary.
Yes.
To get a better, to get a
that's
cheaper plan.
That's more than a mortgage.
It's
I
a
mean,
lot of
so
money.
how do you deal with that? In the exchange, people that it's income based, so you can get a subsidy.
Okay, you can.
There's a couple of different types of subsidies, but the bottom line is those costs can be reduced depending upon your income.
Right.
And the benefits can actually get increased as well, depending upon your income. But if you exceed those limits, you're just stuck paying very, very expensive rates.
Wow. Yeah, that's it's a big thing right now. The employee benefit, the healthcare, right? So typically, what are some other benefits? that you see that companies should offer, that should pay attention to outside of the major healthcare?
Well, there's the obvious dental and vision, and those are something almost everybody uses. Not every company offers vision, but it's so inexpensive that there's really no reason not to.
Right.
And then you move on from there into your disability, short and long-term disability. And I would say long-term disability is often overlooked, more than anything else.
How do you mean?
It's just either it's not offered, or if it is offered, they don't pay attention to the structure of it, and it's not communicated to the employees how important that benefit is. Because
so long-term typically kicks in after 90 days?
Generally 90 days.
Yeah.
You can structure it to kick in after, say, 6 months or even 30 days.
Right.
Generally 90 days is, and it will carry you, I don't know, your average long-term disability policy will cover you for 2 years.
Okay.
And then your better policies go beyond that.
Okay.
Maybe 5 years, maybe to age 65, depending on the situation. And that's what I mean by paying attention to having a policy that fits your employees.
Right.
And because becoming disabled is financially disastrous to a family. From a financial standpoint, it's worse than death. That's a strong thing to say, but what happens is the person that's disabled is generally going to need care. And is going to be at home. Then you got the other spouse that's going to be giving that person care. So it taps into the other family member's ability to earn income. So it's a double whammy. It can take everybody out of play almost and be devastating.
No, I didn't. I haven't really thought about it in that capacity. But you're right. Typically, if you become injured, you're going to have to rely on someone else to help you with the day-to-day activities.
Absolutely. And if it's a very bad injury, let's say your recovery at home and you need 24-hour nursing care, or you're on a ventilator, how are you going to afford that care? Who's going to pay for those services? Especially you're out of work. All right, the employer is not going to keep you on you have to be actively at work to stay on their medical plan.
Right.
Sooner or later, you're going to be put on COBRA. Well, somebody's got to pay for the COBRA. Somebody's got to pay for your health insurance while you're disabled. somebody's got to pay for the care while you're disabled. It can bankrupt a family in a hurry.
Yeah.
And if it doesn't, it's a very big hurdle to take. So having that policy in place is absolutely a lifesaver in many situations.
Right. Yeah, that's huge. I mean, especially because, it kicks, if you can get it, as you said, generally it kicks in after 90 days. Most people can survive 3 months without a pay check.
Somehow.
You make do, right?
Right.
But at about that 3 month period, and you've got, especially if it's the higher earner spouse, they don't have any money coming in, then it puts a strain on the employer, because the employer, they don't necessarily just want to pull the rug out from an employee in most cases.
Right.
But eventually, that's what they're going to have to do.
Well, they have to. It's in policy.
Right.
After a certain amount of time that you're out of work or inactively at work, they have to terminate you from the coverage.
I see.
And offer you COBRA.
That's right. And typically, COBRA means that you don't get the employer's contribution.
That is correct.
So if the employer's contributing 50% or more,
right,
then as a family, you're going to have to pick up that percentage.
You're going to have to pick up basically the full tab of the insurance.
I see. Yeah. So whatever the full cost is.
Right. And if you're not working, that means you don't have a paycheck.
Right.
So how do you pay for your health insurance and your bills and everything else, groceries, food, and in addition, whatever care you're going to need to recover from your disability, whether it was a car accident or a disease.
No, it's huge.
Yeah.
And that makes sense. That's why I know that when we're out with clients, that's one of the things that you really, really harp on.
Right.
Is because, and you've seen it happen to a friend of yours.
I have. I mean, I've seen it over the years happen, just being in this business, you see it. And then I've seen it happen to a friend of mine recently in that very situation. He's at home, and it's tough.
Yeah.
It's tough to watch somebody have to go through that and fight through not only the health hurdles, just struggling, but the financial hurdles that come with it are just enormous. So, and if it's a small company, to add on to the gloom of the situation, if they're below 20 employees, they may not even offer COBRA. They don't have to.
They don't by law.
They don't. Yeah. They don't. If you're under 20 employees, you don't get offered COBRA. There's Georgia State Continuation, which is kind of a mini COBRA, if you will, that lasts for 3 months.
Okay.
And that's it. So you have, in that situation, you've got 3 months of medical coverage you're going to have to pay for, and then you're out on your own.
Wow.
And then if you get classified as disabled, then the government you'll get put on Medicare, but that's not going to cover everything either. So, but you have to wait on all that to go through.
Yeah, that takes time. That doesn't happen. You don't just go online and fill an app out.
No.
You get a card in the mail.
No, and it takes longer than it ever has now, because they have so many people applying for it that it slowed that whole system down tremendously.
No, that's and that's where when we go out with clients, I know you do it, and that's what really impacts us individually. Is we can go out and make sure that these employees, they've got the health benefits that they, that make sense for the employer, but these ancillary products, vision, dental, and disability, and even some life insurance, they're not very expensive.
Right.
On a group side.
No, they're not. They're not. And you go into enrollment, and you have employees just go, I don't want this, I don't want this. And you say, why? They say, well, I don't need it. Well, have you thought about this? And most of the time they haven't.
Right.
They go, sometimes being in front of the employees and communicating to them the benefits offered and what they're for changes the dynamics of the whole situation. And you can absolutely help somebody out in the future. I mean, there's been several times where I have people going, thank you for getting me to enroll in this or take this benefit, because it helped me right here.
Right. No, that's huge. I mean, especially when they can see the benefit, or when they truly understand what it is, because that's common knowledge for us. Short-term disability, long-term disability, those things, and then we look at the different factors inside the policy. It's very common to us. But I remember before I got into the business, all of this, even the group benefits, was very foreign to me as someone signing up for this. I didn't understand what copay was. I didn't understand what, max out of pocket and all these things.
Right.
That as you mentioned, now that that's all digital, they may never have anybody to answer those questions.
No, they don't. I mean, even if the tech's there, let's say they go online and they can ask questions, it's still not going to give them some pointers on how to save money
right
within the system.
Yeah.
Just some little things that we can shed light on. Hey, instead of getting your x-ray here, maybe go here. Instead of getting your lab work here, maybe
so you
go
can
here.
shop where you get x-rays and lab work.
Oh, absolutely.
Okay.
Yeah. And most people don't know that, or they don't do that. They don't understand that there can be a huge difference.
Yeah.
With the same service from place to place.
That makes sense, because especially if I've got a fairly large deductible, why not? My doctor may recommend going to their their organization's imaging place.
Right.
But I could actually go find a cheaper image down the road and then send that to my doctor.
Absolutely. And where you get your eye exams, it doesn't matter. We were talking about voluntary benefits like vision. It's so inexpensive. People, I don't wear glasses. Well, when's the last time you got your eyes checked?
Yeah.
You're talking a product that on a per pay period basis maybe costs for an individual employee $2 a week or something.
Wow.
In that range. And, they can, all they need to do is go get their eyes tested once a year. And they've got to where nowadays that can spot a lot of, through your eyes, they can spot a lot of diseases. They can catch you if you need glasses early. Eye strain causes a lot of health problems, along with everybody staring at computer systems all day.
Right.
And I have a personal story on that. It saved my life getting an eye exam.
Really?
I took my son in to get his glasses, and of course I'm holding the paper 10 feet from my face. It's because I can't read it. I didn't have my readers with me, and the doctor's like, Mr. Moore, when's the last time you had your eyes checked? And I was like, it's been a couple of years, it's been a while. He said, why don't you set an appointment? So I did, and I had vision insurance, so I wasn't too worried about the cost. So I came in there, paid my $30, whatever it was, and he spotted something in my eye and sent me to a specialist. It turned out to be a tumor.
Wow.
And ended up 2 weeks later, literally 2 weeks after that appointment, I was having surgery. They were inserting radiation behind my eye. And it saved my life, just having that eye exam.
Wow.
Just something that simple can, and I'm not the only one that happens to.
That's right, yeah.
Just go in there, spend time on your eye, spend some time on yourself, whether it's your teeth, your vision, get those things done.
No, that makes sense. And if you've got the insurance that helps a little bit with the cost,
absolutely,
then it makes it easier to do the self-care.
Right.
And like you said, if it's $10 a month for vision, it's $120 a year.
Yep. And
you may only pay $30 for your eye exam.
Right.
Where if you didn't have vision, you might pay $200.
Right.
So it's almost every dollar you put in, you get out once a year just on an eye exam.
Absolutely. And I'm not sure what an eye exam costs just straight up. I'm sure it depends on the physician involved. But having the vision insurance certainly helps.
Absolutely.
Yeah. And then if you need glasses or frames, that stuff health insurance doesn't cover, but a vision plan does.
I see. Yeah. So that's part of vision.
Right.
Okay. Now, so what do you see? What do you see on the trend? I'm interested on the trend of these HSAs that smaller employers may be offering.
Right.
Because now, if I understand the new bill correctly, a small employer can offer an HSA plan, but not offer a benefits plan.
Well, that's really an HRA, not an HSA.
Okay.
Right.
Okay.
That's really an HRA. So they can basically kind of offer the employee a set amount of money to then they can use to go to the exchange and buy insurance.
Okay.
Which on its surface sounds good. And that could end up turning out to be a sign of how things are going to go in the future. Now, right now, the rules and regulations are new. They're changing. They're fairly complicated, and no one really knows quite what to make of it quite yet. There are some companies taking advantage of that. Most of them are companies that really don't offer much in the way of benefits right now.
Okay.
So and they're always looking for a way to put something out there for the employees, even if it's not a full-fledged medical plan. So that's a stay tuned.
Okay.
We don't know how that's going to end up, but it's worth watching, and I do think that's going to evolve.
Now, so I see these plans that have an HSA. So talk about a plan that potentially has a little higher deductible. The cost is a little favorable,
right?
But then it has an HSA tied to it. So how does that work for an employee?
An HSA plan is simply a medical plan that fits in, let's just call it a box, that the government said this is a qualified HSA plan. Generally speaking, it's a high deductible plan with no first dollar benefits. In other words, it doesn't have a doctor's office copay. It doesn't have a pharmacy copay until you meet your deductible first.
Okay.
And it is a higher deductible.
So $5,000 or something like that.
Yes.
Yeah.
So it's a major. I mean, there's a range without getting into all the details, but it's basically a major medical plan.
Okay.
Now, the advantage of getting or going with an HSA, a qualified HSA account, is that you can open up what they call an HSA account, a savings account.
Okay.
And best way to look at that is consider it like an IRA for your healthcare expenses.
Okay.
You can put money in it. It's your money. It stays your money, and it doesn't. It's not a use it or lose it.
Okay. So it's not a. This is not a flex benefits plan.
No.
Okay.
No. And it's above the line write-off when you file your taxes. So if you're single, you can put this much in it a year. If you're a family, you can put this much in it a year. If you're over age 55, there's an additional amount you can put in it, kind of a catch-up contribution.
Okay.
They work well. I mean, the main reason to have them would be for that tax advantage account. You know, if you're not going to use the tax advantage account, you just got a major medical plan at that point. And from a company standpoint, they can work very well, particularly if the company is willing to contribute some money to the employee's account.
Okay.
So that when they go to the doctor, there's something in there, and typically the employee can add to that, which they should. But if you just throw the benefit out there and say, all right, it's up to you, you know, to put money in your account, well, that usually doesn't go over very well. I mean, if it's the best you can do, it's the best you can do.
Right.
But there's it's not going to generate any positive feelings from your employees by suddenly doing away with a plan that had copays and going to this.
Yeah.
And even if you put money in the account, you got to watch it because it can be drained quickly if there's not much in it. Now, if you're a family of 4, because that money can be used for any expense, dental, medical, chiropractic, well, you can burn through your money just on dental, and when somebody breaks a leg, there's nothing there. You just have to pay for it all out of pocket.
Yeah. No, that makes sense on the having the company put a little bit of money in there.
Right.
It helps soften the blow a little bit, and hopefully it'll encourage the employee to also put a little bit of money in there. That way you got a couple $1,000 maybe in the year to work with. So as we approach 2020, what do you think? You think anything major is going to happen in the coming years with healthcare?
Something will, but we just don't know what it is. You know, a lot of that's which way the political winds blow.
Yeah.
Frankly.
Yeah. It seems to every year get more and more expensive.
Yes, and that will continue. Now there are some trends taking place. I think people and employees are learning that they can shop where they get their care. Especially testing and x-rays and labs and things of that nature. So as time moves on, you know, that's going to that's going to help keep costs down.
Yeah. Well, but that's one thing that I know you do when we're out with clients. You know, the whole group's impacted by the cost.
Right.
Right. So I think that's something that you explain very well, is that if you've got a group of 20 people at this small business and 15 folks are on the plan, if they all max the plan, you know, if they're all spending, you know, as much as they can, then that group's plan is likely going to go up the next year.
Correct.
So it behooves the whole group to shop.
Well, to pay attention to what's going on.
To if they can save $1,000, even though their copay of, you know, let's say they've got a 30% copay on imaging.
Correct.
Well, even though their 30% of 500 is not much different than 30% of 1,000, the plan's going to get hit with $1,000.
Right.
And that's something that I know you try to explain to the executives and business owners, is that let's look for ways to save. Let's all look for ways to save.
Right.
And I think the telemedicine has been huge on that.
It is
to help save, you know, those very expensive doctor visits.
Absolutely. And that's a really popular benefit now.
Mm-hmm.
It's inexpensive, and it's kind of built into a lot of plans. And even if it's not, you can add a telemedicine benefit for your employees.
Separate. Okay.
Inexpensively as well. So you even have some companies that maybe don't offer benefits that will offer a telemedicine benefit to help cover some of the bases, so the employees can at least, if they have a cold or a cough or a rash, they can talk to a physician or teleconference with them.
Okay.
And get a prescription called in.
Okay.
As well.
Yeah.
So for your day-to-day ailments, they're great.
Well, and it's convenient, but it also saves the expense.
Yes.
Because in most cases, like you said, it's very inexpensive, but you also don't get hit. Because the plan, if you go to the doctor, if it's a $150, $200 doctor visit, the plan gets hit with that $200 doctor visit.
Correct.
Even though your copay may only be $30.
Right.
Yeah, and you multiply that by 10, 15, 30 employees 5 times a year,
Yep.
then all of a sudden the plan is taking some significant cost.
Right, and it can help keep your employee at work. You know,
Well,
if I'm sitting behind my desk and I'm doing work, and I can take 10 minutes away to call the doctor,
Mm-hmm.
and he prescribes me a 3-day antibiotic, well, that was just 10 minutes.
Right.
But if I have to go to the office, I've got to
That's a
drive
good
there,
point.
I've got to drive back, I've got to wait God knows how long.
Mm-hmm.
So that can change the dynamics as well.
Yeah, I
So,
mean you're going to lose that employee for half a day
right.
if it's something that's non-contagious like a skin rash or something.
Absolutely.
So
And the same works for their children, too. If they just have what's going around, they can call the doctor and they'll almost immediately know what it is.
Mm-hmm. Yeah. No, I think that makes that's a great benefit to add, and it's and like you were saying is on a group plan it's typically less expensive,
Mm-hmm.
and the same thing goes for just standard life insurance, right? Is that typically if you offer that to your employee, most of the time it's guaranteed issue, which means. Talk to me about the guaranteed issue. I don't.
Well, that just means they can get a given amount,
right.
50,000, 100,000, whatever it is,
Mhm.
depending on the group, without any medical questions.
Mm.
So the employee can enroll and get. And life insurance is very inexpensive. It's the one benefit that's gone down over time because we keep living longer.
Yeah.
So it's less expensive for me now. Well, at the same age than it would have been
Right.
30 years ago.
Right. But it's even a better bargain when it's a group plan.
It can be, yes.
Yeah.
Yeah. Usually it's simple for sure because you don't have to no testing.
No
it's
testing,
just
no medical.
as long as you sign up in the right time frame,
Mhm.
then it's pick what you want, sign up, and tell us who your beneficiaries are. And that's it.
And in most cases, you can get spouse and children on the plan.
Absolutely.
Yeah. And those are just the disability, the life, the vision, the dental. As you always talk about. I mean, those are real benefits that don't cost a ton of money.
They don't, and they have real impacts on day-to-day on day-to-day expenses. Because, your average family, they're going to go to the dentist. They're going to get their cleanings. They're going to have cavities. They're going to have root canals, and it gets expensive.
It does.
It really does.
Yeah.
I mean, a lot of families, if you're healthy, you're going to spend more at the dentist in a year than you will at the doctor.
That's true. Yeah. I mean, if you're right. If you get the occasional cold but don't really go to the doctor,
right,
you may never use that. The $600, $700, $800 a month you might be spending in premium.
Right, and that's where you just need to pay attention to what dental plan are you putting in, because there are differences.
Yeah.
And a lot of, I think you mentioned before, the medical is so overwhelming because of its cost and concern right now that it can take the air right out of the room and not leave a whole lot of discussion for anything else. And I think that's not good, because if you pay attention to some of the other benefits, you should.
Yeah.
Because there's a big difference between a good dental plan and an average dental plan.
Right.
And the premium on it is small.
Yeah.
So you're better off paying a little bit more for a really good dental plan, where you're not going to get balance billed as much. You can probably go to any dentist you want to, and it's going to cover far more than an average dental plan, which is better than nothing, but it's going to leave the employee scratching their head going, well, this just didn't cover a whole lot.
Right. Yeah. Well, and that's, and you bring up a good point. If you're healthy, everybody, because of the ticket item, everybody focuses on the group benefits or the health benefits. But like you just said, if you really look at it and go, well, I only went to the doctor twice last year.
Right.
The impact isn't, maybe not that big of a deal. Even though the cost is huge, the amount that you actually use it may not be as much as your dental and maybe your vision.
Right, and it's just subtle differences written into the policies. An easy one would be the number of cleanings you get a year. Some policies will say, well, you get 2 cleanings a year, and some policies say you get 1 cleaning every 6 months. And you say, well, what's the difference there? Well, let's say you went January 1st, and then just because of time frame, you needed to go right before your 6 months was up. Well, that second cleaning is not going to be covered.
Yeah.
Whereas 2 cleanings per year gives you more flexibility.
Yeah, that makes sense.
And that's just an easy one to read. There's a lot more things that go into the policies that hopefully your broker would be reviewing with you, so you'll know what you got.
Well, and that's what I know you like to do, and I certainly enjoy doing it with you. But going out and really explaining all the subtle differences and making sure that for the money they spend, they're going to get the most out of that.
The best value.
Yeah, just the best value. And there's so many choices. I mean, it's like going to a restaurant and you got a 6-page menu, and it's like, okay, what am I going to get to eat?
Right.
And I think the insurance companies have done that so that they can kind of give so much option.
Right.
But in many cases, it's just very, very confusing.
It is. Choice is a good thing generally. Everybody likes choice.
Yeah.
Employees like choice.
Right.
But you're right. It can get confusing.
Yeah. It's just when you got 12 different plans to choose from one carrier, and you multiply that by 3 carriers you're trying to choose from,
right?
And you've got 40 different potential plans.
Well, that's where our job comes in. It's to help the employer say, look, you have this many employees. You only need to really offer this many plans.
Yeah.
To offer the appropriate amount of value and choice for your group.
Yeah. Well, and I think that's what you do a really good job at. Is you kind of you sift through all of the hard work and say, okay, based on your employer size, you need 2 or 3 plans. These are the best ones, and
right.
Let's just kind of pick the ones that are going to make the most sense. But well, thanks so much for coming on the show. I think hopefully this has been very good for the audience. Greg is certainly very, very knowledgeable, and we would love to come out and give you guys a look, let you and help you evaluate your return on investment for all of your employee benefits.
Absolutely.
Thank you.
Thank you.